Good morning and welcome back to Almus Market Mornings. Iran has put forward a fresh proposal to the US to reopen the Strait of Hormuz and a move toward ending the war, suggesting an extended ceasefire while postponing nuclear negotiations until the tensions ease. While the proposal has been passed on to the White House via Pakistan mediators, there's still uncertainty around whether the US is willing to engage, keeping the markets cautious for now. While at the same time, attention shifts to Japan, where Finance Minister Katayama has issued a strong warning to speculators just ahead of the Bank of Japan's policy decision today. With the yen hovering near key intervention levels, she reiterated that authorities are ready to step in at any time, emphasizing that they will take a bold action when needed and are prepared to respond 24 hours a day. Good morning, JK. What are your expectations from the Bank of Japan meeting this morning?
Morning, Ishan. Uh, yeah, as usual, the Bank of Japan meeting normally is contains no surprises, and market is also well prepared for the decision. Uh, Only thing is, in the past, I have seen that whenever Bank of Japan decides to hold the rates unchanged, particularly if in a situation where it is warranted to hike the rate, if their decision not to change the rate results in yen weakness, and the market tends to test the Bank of Japan's resolve in defending the yen. So that's sometimes has resulted in big volatility, and today may not be an exception. We could still see a market trying to test the 160 levels, or just ahead of just above that. We saw yen weaken to 160.50 in the last month, and that, of course, reversed from there without really a major intervention. But there were talks that Bank of Japan as well as the Fed officials had actually checked the rates in the market. So that thought will be there, but since yen has not really sustained any strength, also, and with clearly the risk assets performing well, markets might tend to test the Bank of Japan once again. But I think looking at this consistent way in which the Bank of Japan officials have also been talking about defending the yen, it's likely that then some sort of action could be seen if the dollar tends to break the 160.50 levels. Otherwise, I think we could very well see eventually the dollar settle down into the recent ranges as well. Of course, market will also wait for Fed rate decision that will be announced tomorrow. Usually, the Bank of Japan decision comes a day later than the Fed, but this time Bank of Japan is deciding a day earlier than Fed. So might as well keep the market, on a holding pattern till the Fed rate decision happens. In the meantime, as far as the Fed is concerned, which the meeting which Powell is likely to head for the last time. Interest is surrounding on not just what he would say, but also whether he will stay after the meeting. This is very likely that market is expecting him to move on if war is taking over. However, if he does decide to stay, it can stall president's plans for nominating another member of his choice, who could well be a dove and paving the way for interest rate cuts, which the president has been pushing for quite some time. Now, about the Fed decision itself, the central bank has had a good feed on the state of inflation post the war, and it would be tricky to give a clear forward guidance on rates path, considering the uncertainty on continuation of the war. The Fed ideally does not want to hurry into a hike or even a hawkish stance, as much as they don't want to hurry into a dovish stance when employment started to soften recently. So it could be a very balanced statement that we'll get from Fed, but we'll wait and see. We still have a couple of meetings of central banks, that is Bank of Japan today and Bank of Canada tomorrow, before we actually embark on what happens with the Fed. On the war situation, as said, we have entered a phase of high volatility in the stance, hardening of positions by either of the countries, then continued diplomatic maneuvering and kind of cat and mouse game that they're playing. We know that the weekend meeting between US and Iran officials did not take place actually. Then as you also mentioned, Iran has proposed that the Hormuz Strait will be open if the talks on the nuclear issue is postponed, for a future date, and that is what they have conveyed to the Pakistani officials. It remains very unclear, if Trump, who has actually vowed not to lift the blockade until the deal with Iran is 100% complete, which includes even the nuclear issue also. In fact, nuclear issue has been the main basis on which they have actually started the war. For a long time, the nuclear discussion or negotiations had been taking place, and it did not move further, and that is when these tensions have actually begun. So again, we are in a stalemate situation, and not likely that we are going to get resolution very soon. So the oil price continues to trade in higher range, keeping other markets also slightly on a volatile phase. Notwithstanding all these, stocks have been doing very well. Particularly in the US, because earnings reports have been very good. We have seen earnings growth of around 15% in US major companies, and despite fears of inflation. But what questions remain is, if the inflation remains more sticky and Fed maintains some hawkish stance, whether this will maintain the strength of the market, particularly uh, when there is still some doubts about AI companies' returns on their huge investments. The first quarter earnings have been good, and today we have, not today, but this week we have five of the Mag 7 technical companies actually announcing the results. So markets might well wait for these companies' numbers before the next move happens. Otherwise, the rest of the markets are in holding pattern ahead of the central bank decisions. Dollar is also hovering in ranges ahead of the central bank statements, and all focus is on yen today, as I already mentioned. Euro, of course, euro and GBP, in fact, might react somewhat negatively if those central banks maintain wait and watch attitude, and remain hesitant to hike the rates in the face of the inflation. On the rupee, nothing has changed, except that we are stalled near 94.20 for a couple of sessions now. Now, having moved already 2% up for the dollar from the low seen earlier in the month, following regulatory directives from RBI, we have seen huge buying since then, and market is now seeing a steady intervention from RBI as well. Yesterday, we have heard offers from the PSU banks. Neither the oil-related challenges, both in terms of global prices nor the supply issues, have gone away, as Iran talks have stalled and foreign investor flows have stopped, though they have not been as hefty as they were earlier. So I think, in view of the huge amount of global events that are lined up, rupee also might see some stalling, and wait for some progress or direction in the Iran-US talks as well. So we may be in for a couple of days of range trading in the USDINR. Even the central bank might want to maintain it before they allow the market to either move up, or market takes a decision based on the central bank indications, as well as on the flows. So we are basically in a stable range for the market for the time being, ahead of Fed and other central bank decisions, as well as watching the developments in Iran US talks. Thank you.
Thank you, JK. And just to summarize, the markets are well prepared for the Bank of Japan to hold the rates this morning. While historically, them holding rates results in the yen weakness, and today may not be an exception, with the markets maybe testing the 160 level. And we will also be waiting for the Fed decision tomorrow, which is the meeting where Powell could be heading the meeting for the last time. and it'll be interesting to see whether he will stay in the Fed post this meeting. When it comes to the rate decision, the Fed does not want to hurry into any stance, whether it may be dovish or hawkish, keeping a neutral front due to the current geopolitical unease. But if the inflation continues to remain more sticky, the Fed may take a hawkish stance from here. While the euro and GBP may react negatively if the central banks today and tomorrow may take a neutral stance amidst this inflation situation. And when it comes to dollar rupee, it stayed quiet yesterday, trading in an extremely narrow range of 15 paise, with the RBI holding the rates around 94.20 levels and waiting for some progress on the US and Iran talks. Thank you all so much for listening, and we'll catch up tomorrow with a fresh round of updates. Thank you.